QE unwind at work. Federal Reserve Treasury securities, you can see that this has been, in fact, unwinding $70 billion, a whopping $70 billion, which is basically, if you look at different QE programs that they've had, whether it's Europe or the US, that's like 1 month's worth. So it's nothing. It's literally nothing. But they can show you this trend that's been, on the decline. Yes, they have been tapering, but it's so fractional. Truly so fractional. I hope it continues. I hope that they increase it and these jumps start going further and further and further down. But look at the levels of which we have increased this QE all along the way. We're talking about $200 billion a month that's being injected into the system. I'd like to see $200 billion a month coming out of there. Not 70 billion over the course of, what has it been, maybe 6-8 months now? It's not sufficient. Truly isn't. Looking at this, they're comparing a few things, and one is the RSI, okay? So I'm not going to get into it anyway. I've covered the RSI before. Just want to show you here that we are headed into the same territory that we've experienced during the financial crisis, the dot-com boom, and leading up into the crash of '87 here as well. One of the points that I just wanted to make here was that we can see the stock market rising. By the way, look in the comments below. You'll see all the people who will not watch this far into the video. They'll watch the first 10 seconds and then they'll comment. But anyway, what I'm trying to say here is that we can go and we can go way over anybody's expectations. The Dow can hit 30,000. You can see, the S&P reach over 3,000 for sure. You can see interest rates staying low for a very long time. You could see the QE winding down at this ridiculously slow pace, and it just stretches everything out for longer and longer. And the PE ratios and everything is going to go wild. That can happen. It does happen, in fact, every single time. We always way overshoot. But guess what? They always come tumbling down. And when they do, nobody is spared. Nobody ever says, I got out right at the perfect time. Nobody says that. Look at what happened during the previous financial crisis. Everything, it seemed, everything was declining in these periods of time. Nobody knew where to turn. And when you tried to sell something, you weren't given what you thought you would get. Because, of course, there's not as many buyers coming in. People don't want to address that because they go today, oh, look, the bid and the ask, they're so close together. But it doesn't work like that when you have something tumbling down. Oh, don't worry, I'll hold on. I'll hang on. No issue there. What about in the dot-com boom and bust? Where you had a similar situation where the NASDAQ comes tumbling down. Doesn't hit, where it was before until, if I'm not mistaken, 15 years later. 15 years to get your money back. Oh, don't worry, I'll just sell. Forget it. There's a whole bunch of excuses that people want to use. Listen, you have to be on top of things. And that means sometimes taking some profits earlier than you would have hoped. That's what successful traders do. All you hear about is the buy. But you don't ever hear about the time where they start taking profits. Yeah, they might buy later on as well. But they take profits. They do that. Successful traders do that. Fearful people hang on for dear life. And you could do that in some cases, and you can make a lot of money doing it, as long as you sell off when the time comes. 5-year cyclically adjusted PE ratio versus the real S&P 500 price. Guess what? The CAPE you're looking at here, PE ratios basically, we are heading into the territory that brings it, you can see here, I want to show you. Back in 2000, you saw it coming around and hitting levels that seemed to be appropriate for what the stock prices were valued at the time. And I'm talking about, just to clarify, they were out of whack, the PE ratios, and so were the stock prices. Not all stocks, but some of them. And this happens occasionally. You can see that this occurs, in certain instances going way overboard. In fact, we're heading into those territories now. We've exceeded what we experienced during the the financial crisis. And so where it's going to head, I don't know. Probably a lot higher for certain stocks. I mean, look at the FANG stocks. For the most part, these are the ones, the biggest offenders, but they are seeing the most influx of central bank monetary easing. And congratulations, the free money is pretty damn good. Let's take a look at this. You can see that the US 10-year yield is tracking almost exactly to the Fed balance sheet in the inverse. I thought it was interesting because you can look at this. We're going back. It's not like it's as if it's a couple months here. This is dating back into the end of 2016, and it's tracking it almost precisely. So what does that tell us? That as the Federal Reserve decides to shake off some of that balance sheet, we could definitely see the 10-year yield going higher and higher and higher. And ultimately, there are historical examples where you look at where the yield is, and there are certain levels that always precede a crash. Whether or not that's going to happen, hey, why don't you ask the people in the Federal Reserve? They seem to know everything. Why don't you ask the people in the YouTube comments? They seem to know everything. Not me. All right. Jamie Dimon says prepare for 4% yields, potential volatility rise. U.S. borrowing may jump to $400 billion a quarter. How the hell are they going to pay this back? Volatility could rise as QE exit proceeds. That's obvious. I just wanted to bring this out there because when you have a very important figure in the financial world like this saying something important, I need to bring it to you, okay? This is a type of guy who obviously is in the know. He's aware of what's going to happen. He's not going to share the truth with us, but something like this he could definitely mention, and he could be right. We'll have to see. There's almost 96 million people. That's a record number that are not in the labor force. They're blaming boomers retiring, which is certainly true. But we also have this factor, and that's something called an economy that's in the toilet. Why aren't we able to admit it? Yes, again, boomers are retiring. Let's just get that straight. But a lot of them are unable to retire. And I've shown you those statistics before. So there is a group of boomers, they're retiring. There's another group of boomers who would be retiring, this is the age, but cannot because they can't afford it. And then you have people are not able to work because they can't get jobs. But I'll tell you though, you look at those jobs numbers and you just see them increasing. I mean, it looks great. How's that possible? How can we possibly see jobs numbers rising, the amount of job applications and everything else? How can we see that number rising when I'm saying exactly the opposite? Well, it's very, very simple, and I'm going to write it out so that all of those at the Fed hear me. Temp workers. Temp workers are the reason why this number is doing well. You can make those numbers look all good, but when you have people that you have to lay off every month or every quarter or what have you, seasonal work and things, and then they get laid off and then they're back into there trying to get some employment insurance and they're trying to get another job and they're doing what they can, they're out of the workforce, and then they're back in, and then they come up on the stats again. Temp workers, okay? Big factor. Social Security beneficiaries top 62 million for the first time. Oh, that's not a problem at all. Don't worry, because this is debt that we owe to ourselves. So it's not an issue. Let's just close the book on this. Nothing to see here, folks. Intragovernmental debt. You're watching this skyrocketing as time goes on. Just steal from the future. You don't have anything to worry about. This time is different. And whatever silly lines that we're being told. Social Security is a massive burden on the government. It is expanding as time goes on, and yet you have less and less people paying into that system. It's called a Ponzi scheme. Social Security beneficiaries outnumber the population of Italy. That's insane. We're looking at the amount of people, the sheer amount of people that are getting Social Security in the United States is massive. And so they've talked about, quote unquote, reforming entitlements. And what that means is basically you've been used to a paycheck of, let's say, $1,000. Suddenly you're going to get $800. They've been talking about this with pension funds. They've been talking about it all over the world, in fact, and they actually do, in some instances, cut from what people have been used to. And there is a lot of this big group of people that say, that's fine, cut from them as long as you don't cut from me. And that's how these things start. Big mistake. Big mistake. I think that ultimately we shouldn't have something like a Social Security, but you're not supposed to say that. But essentially, those who are expecting it, those who are living on it today, maybe they can be paid. But the future generations, let's stop lying to people. Really, let's stop lying to people and pretend that you can afford this. Let's shrink the size of government and let's actually come to a solution. Number one priority, shrink the size of government. U.S. consumer borrowing rose at a slower pace in March as credit card debt outstanding declined by the most since the end of 2012. Total credit increased $11 billion, and the prior month revised up. Revolving credit outstanding dropped $2.6 billion month to month after so on, and then it goes on. Looking at this, what I can tell you here is that it is unfolding as we speak. Now, does that mean that necessarily credit cards are not being used and everyone's becoming, really frugal and things? No, there's more to it. I want to see this in the coming months. I will show you it if it continues on this trend. If it does, we have a very, very big problem on our hands, okay? We need this system, the way it works. We need more and more and more debt. Student debt is rising. $1.5 trillion. Credit card debt suddenly is coming down. Never happened before since 2008. It's weird. Deutsche Bank weighs cutting U.S. staff by about 20%. I showed you 10% previously. Now they're talking about 20%. That's worrisome because this is a company with a lot of employees. And if you have a lot of employees who are making at least reasonable wages, maybe great wages, and suddenly they're out of the labor force, now they have to look for a job. But they're not going to take a job at McDonald's. They want a well-paying job. So what do? Well, they wait and they wait and they wait, and then they become disgruntled. And then after a year, they're off the statistics. And you see unemployment rates that go under 4%. And it gives me a laugh. It gives me a laugh, and I need that every once in a while. Rising rates. Most Virginia insurers requested double-digit increases for ACA, Affordable Care Act plans. Just showing you some of the examples here, but ultimately you can see that the healthcare is increasing the burden on people. I've shown you this before, how if you look at the GDP numbers, they've increased. That is actually one of the major contributing factors is the price people are paying for healthcare. Think about that for a second. You think, the GDP is doing well, it's doing well. In fact, what has happened is most people are just spending more on healthcare. That's not good. That doesn't mean that's not a beneficial thing, as if the GDP is suddenly helping out people. Okay, very quickly, two things. U.S. oil from ConocoPhillips has moved to take Caribbean assets of Venezuela's state-run PDVSA to enforce a $2 billion arbitration award over a decade oil nationalization of its projects in South American country, according to three sources familiar with the actions. So they're targeting these facilities on different islands, and so on. Now, if they were to actually start seizing the assets in any way, okay, I'm talking about businesses or maybe state-owned assets, we're going to have a big problem for Venezuela. It's going to go downhill very, very rapidly. Now, we may have other countries stepping in. I think this is a big problem for China, for example, because they have a big stake here, and I think that this is going to unfold as time goes on. You could see what's happening in Argentina right now, not looking good for South America as a whole, and there is definitely contagion. People in Venezuela are just fleeing in every single direction. This is a big problem. US versus Venezuela oil production since 2005. As time goes on, US crude, okay, with all the shale, with all this fracking that's been taking place, U.S. production has skyrocketed. Yes, of course, there have been a multitude of earthquakes happening, literally hundreds and sometimes thousands of earthquakes in areas they've never had earthquakes, or very, very seldom. Suddenly, that's not an issue, though. You're not allowed to talk about it. But that's occurring. At the same time, you see Venezuela oil production just declining and declining and declining. I mean, their infrastructure is really taking a beating as time goes on. I mean, it's truly unfortunate to see it happening. I know that there's internal factors and there's external factors. The same with any country, of course. There's always somebody affecting from the outside, but this is really bad. That's all for this video. I'm sure I'm gonna have to split this one in two. I don't know how long I went for, but probably way too long. I hope that you found it informative. I was trying to speak as fast as possible, concisely as possible. I hope you do appreciate it. I'm trying to bring you good intel. I'm trying to bring you the good information, the charts, the articles, everything, piece it together, and trying to do things differently than what you see the other guys do. I see a lot of opinions. I see a lot of single pieces of information being stretched over longer periods of time. And what I'm trying to do is just, spend several hours finding all of this, bring it to you in 10 minutes or more in some cases. But that's what I'm trying to do. I hope you appreciate it. If you do, please give me a thumbs up. If you support free speech, please give me a thumbs up. Last but not least, if you found this video informative, I know that you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. You can do so at Amazon. If you go down to the link in the description of this video, you'll be taken over there. They have a look inside feature, and it will allow you to flip through the pages of these books to see if you like them. Take care.